The Taxpert Incorporation app is designed to show the difference in net income for an individual who might be trading as a sole trader or in a partnership, and the income that they might get if they traded instead through a limited company. New for this year, 24-25, the app enables you to determine the percentage interest that the individual has in the business. And so for a sole trader, you would simply leave the percentage interest, which I'm circling up there, at 100%. But if you wanted to deal with the incorporation of, let's say, a two-person partnership, where each of them has a 50% interest, then simply enter 50, and you'll see in a moment how that is then built into the calculation. Now, as usual, we will enter the trading profit, and if the self-employed trading profit was, let's say, 150,000, then the calculator will automatically take the individual's share based on the 50% in this case that you've entered. And so we're looking at 75,000 either as a partner or a share of company profits, and that 75,000 is automatically picked up over there. We can then simply press the optimize button, and as with the other apps, that will then whir through something called Solver, which is a very complicated piece of computer coding, and it will eventually, it can take quite a while, identify the optimum combination of salary and dividend for the profits that we've entered. And here I can see, not surprisingly, that the optimum would be to have a salary of 12,570, and the rest of the distributable profit, 47,409, would come out as a dividend. And on that basis, we're assuming a 100% distribution of the remaining profit. And I can see straight away that the taxpayer in this case would be worse off from incorporating by £1,364. And that's not that surprising given the increase in corporation tax rates that have taken place. Now, a couple of further variables, if you like. We can enter whether or not the individual is of state pension age. Now, that's not going to affect the company income because they're only taking salary of 12,570, and that's at the lower earnings limit, so no class 1 on that. But if I change the no to yes, and you look top left of the screen, the class 4 will disappear. So instead of 2757, the class 4 goes to 0, and that makes incorporation even worse. So let's put that back from yes to no. For a Scottish taxpayer, well, here I would expect incorporation to be more beneficial. Let me just, to vary it a bit, change the percentage back to 100%. So we're now looking at a sole trader. You can see the profits we're getting are 150,000. And at the moment, I'm trying to change, but of course it's being protected. That's why I can't ink on it anymore. At the moment, we're looking to be worse off, but that's because I haven't re-optimized. Let me re-optimize for that 150,000 and see what we would get for incorporation at that level. And the answer is coming up in a moment. I think the salary will probably remain at 12,570, and the balance would be paid out as a dividend. Here we're looking again at a non-Scottish taxpayer, and here comes the result after a couple more seconds. And indeed, the salary has gone down to 9,100. I should have seen that coming, but we're quite a lot worse off. Whereas if we were looking at a Scottish taxpayer, I would consider that we should be better off because the Scottish tax rates on the self-employed income of 150,000 would be a lot higher than for a non-Scottish taxpayer. So if I change the no to I, indeed, incorporating is advantageous for the Scottish taxpayer. So that's quite interesting as well. Now, we can also input, for example, interest from the company, and many will know that taking interest from your own company can be very tax efficient. And if I were to re-optimize for the Scottish taxpayer, I'm assuming finance, let's say, of 100,000 at a 6% rate. So you've loaned or financed your company with 100,000 of loan from the director shareholder. And now, instead of the previous figure that we had as a benefit, we're actually going to be better off by quite a significantly greater amount 2573. I can't remember what the previous figure was, but never mind. Now, here's another innovation for 24-25, following requests from users. The original app simply assumed a 100% distribution of distributable profit. As you can see there, the dividend of 106,491 takes out all of the profit after salary and interest. But you can choose to enter any retained profit figure you like. Let me just reset everything to 0, and we'll start again with a clean slate. And let's suppose I've got trading profits of, I don't know, 180,000, and I shouldn't put in that, enter that figure. And let's suppose we want to retain, let's say, 60,000 in the company. And so I enter the retained profit required, and then when I optimize, it's going to work out the optimum combination of salary and dividend, given that after that dividend, I want to be left with retained profit of 60,000. And again, after it goes through all of its processes, we will end up with the answer. And 12,570 again as the salary. You can see the 60,000 dividend left. And down here, and this is where we do need to be able to interpret the result sensibly, I've got the net income from the company of 126,068. That includes the 60,000 retained profit. In terms of pure net income, so ignoring the retained profit, inevitably you're going to be worse off in pure net income terms, 66,000 odd against 107 for the self-employed scenario. But when you add in the 60,000 of retained profit, you're in fact going to be quite a lot better off. The figure up here of minus 41,873 reflects the net income. As it says here, it excludes the profit retained in the company. And then finally, I've added in, again for 24/5, a client report. This can be printed and shown to the client. If you're self-employed, your net income would be 107,940. Whereas if you operate through a company, and in this case retain 60,000, your net income plus the retained profits would be 126. However, the overall cost of incorporation in terms of income is going to be minus 41,873. Well, a very sophisticated analysis, which I hope users will find useful. As always, let me know if you find anything that you'd like to discuss or add into this app. I haven't mentioned, but you can, of course, add in other earnings that the sole trader or partner might have.